Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, May 2nd, 2011 is sponsored by Realtik. Alright folks, what we're going to do is get right into the action-packed day. We saw a solid gap up in the markets this morning on optimism overall as Osama bin Laden was killed last night. And again, the president made a speech, I guess it was around 11:30 p.m. Eastern Time, talking about that. The futures went crazy. They went spiking to the upside. But ever since they made their high about 20 to 30 minutes after that announcement came out, they have faded since then. And the fade continued this morning. We had a nice little gap up. The markets went right into the 137.10 to 15 level. Now, this level is a main level, and I literally talked about this to my premium members of the Research Center and the Intraday Stock Chat over the last 2 weeks, folks. I said the level this market is going to is 137.10 to 137.15. And you can go in the videos if you're a Research Center member. You know, obviously, I've been discussing it. But I gave this level out, exactly this level, this morning's high. And again, sure enough, we hit that on the open. The market sold off. We went back, retested it, tried to break out. But this is a powerful level. A little bit of an intraday topping tail right there as well. And sure enough, the market sold off of that, coming all the way back in. Please note, if you take this little pivot low right here and just put a line across, look at that little pivot. It's a great little scalping level in the day. In addition, you have this little pivot top right here. Notice how we come down here and get a little bit of a bounce. The levels continue to work. You have to use levels in your trading. If you're not using levels in trading, you're giving money away. It's that obvious. And again, I'm on the other side. My traders at In the Money Stocks and my Research Center members are in there, and they're taking the money away from you if you're not doing this right. And again, there's a free trial to the Research Center. There's a free trial to the chat room. Get involved, folks. All right. Now, the markets, again, optimism on the back of the Osama bin Laden news, but also, in all fairness, folks, it's really a dollar debate here. I mean, this is all about the dollar. Take a look at the UUP. It's down again today. And again, the dollar has come off the lows of the day, and as the dollar's moved up, that's actually coincided with the sell-off in the markets coming back in. But the dollar obviously weaker this morning, weaker into the early morning session, and that helped the markets move higher. Now, again, in all fairness, the markets are not selling off dramatically. They're not up dramatically. The Dow right now is up 14.5 points. NASDAQ's down 3, and the S&P's flat on the day. But you just can see the action. The dollar continues to decline. The markets continue to hold strong, and again, by strong, I mean neutral to positive, which is where they are today. And as long as the dollar declines, the markets seem to think everything will be okay and they can continue up. The inverse relationship that's between the SPY and the dollar is unbelievable. Take a look at this, folks. I'm going to show you something right now. We're going to go to the daily chart of the SPY. And I'm going to zoom in on that, and this is, again, look at the beginning of 2011. From the close from 2010 right here to the highs today, that's approximately a little over an 8% gain for the year. So markets are up approximately 8%, give or take a tiny amount. If you take a look at the UUP, which is the dollar ETF, and you do the same thing and you calculate from where the dollar closed 2010 to where it currently is, you have a loss of approximately 8%. So what am I telling you this for? This is amazing. This is an amazing stat, and I'm surprised the media hasn't talked about it more. The markets are up 8% because the dollar is down 8%. You almost have a one-for-one impact in the reverse from what the dollar does to what the market does. That implies that if the dollar drops 5 more percent, markets will go up 5 more percent. If the dollar goes up 5%, markets should pull back 5%. And again, obviously, there will be little things here and there that change that ratio based on how the market feels about the dollar. But I'm telling you right now, black box trading programs are in control, and that's why you're seeing this. They're scheduled to take advantage of the dollar drop by buying and pushing up equities. Now, you might say, well, why does that happen? I mean, why do we see stocks going up inverse equal to what the dollar's dropping? Well, the answer is pretty simple. The dollar, folks, is a form of value that is depreciating. If you have a dollar in your hands from where the market started this year, you're basically down 8 to 10 cents. So that $1 is worth 92, 90 cents, somewhere in that range. Well, the crazy thing about it, it means it's just like with gold. Gold, if that dollar is declining, what does gold have to do? It has to adjust up to keep its value. Gold is gold. It has to keep that same value. So as the dollar declines, gold must go up proportionally. All right. In addition, people are now, in the black box trading programs and key institutions are looking at commodities and saying, well, you know what? A company is like a commodity. I mean, it's an actual value. You have that building where your headquarters are. You have those, key turbines or whatever you're making. That's a value. That's a commodity. So therefore, as the dollar drops, these companies' values must rise in accordance to keep their same intrinsic value. Okay, and I hope that makes sense, folks, because it's very, very important. In any case, that's what you have going on here, and that's why you can, again, draw that interesting conclusion where you have the dollar down 8% for the year approximately, and the markets are up 8%. Now, the markets are coming back here. Volume is getting much, much lighter here. This is the SPY intraday 10-minute chart. We are hitting a little short-term resistance here. I do think the markets have a good chance of floating back up a little towards the end of the day. Now, you might say, well, why is that? Well, because the light volume always dictates neutral upside. Monday afternoons are actually the lightest trading of the week. A very, very light trading week. Friday's numbers 2, and then obviously Monday, Tuesday, Wednesday are in the mix in the middle of the area there. All right. Now, a couple other things here as we look at this market. I want to take a look at a couple key stocks. Some stocks that are leading the market. What's helping this market stay flat to positive today? IBM, no doubt about it, guys. IBM's up $1.88 today. That's a key component of the Dow Jones Industrial Average and must be respected as such. Goldman Sachs is having a solid day, up $1.50 today. That's also a key component, often looked at as a leading indicator for the markets. In addition, you also have Amazon. Amazon is ripping higher today. The stock had a beautiful in spirit of bull flag, which we can look at on the daily chart as I flip over to the daily. Please look at this. This was your former high at 192-ish. Look at the push through after earnings, and then look at the 1-2 bar consolidation. That's classic consolidation, and Amazon ripping higher today after that bullish consolidation pattern formed. Now, Amazon is probably going to continue to 205 to 210. I would say somewhere around 210. I think it might be starting to be a little extended, but it still has more upside, and I'm not getting in the way of this on the short side yet. 210, I might start to reevaluate my decision and maybe look for a little short side action on Amazon. Stocks that are lagging the market. Apple Computer. You have to just mention this. It's not exactly having a big down day today, but bottom line is this stock has just had a lot of trouble. Here the markets are making new 52-week highs day in, day out. We're at levels we haven't seen since 2008 in this market, and Apple Computer is not even back to its highs that it made all the way back in February. February 16th, it hit a high of 364.9, and since then it hasn't even come really close to that. The highest point was around the 355 area, which again was $10 away from that 52-week high. And today, again, markets are flat to positive. Apple Computer is down $2 on the day. Now, the interesting thing is Apple's actually making a little in spirit of bullish pattern here, but the fact that it's not going with the market has to be a little bit of a red flag here, and I warn everyone to be a little careful there. Yes, Apple's a major, powerhouse in the tech industry, and they've come back, and they're actually the second biggest market cap value stock in the world. But you have to just wonder why Apple hasn't gone up over the last few days. I mean, if we look at the SPY, take a look here, guys. I mean, look at the SPY over the last 1, 2, 3, 4, 5, 6, 7, 8 days. This is over the last 8 days. The spiders have soared from basically 131 to 136. That's about 4%. But if you look at Apple over that same time frame, 2, 4, 6, 8. I mean, Apple's basically flat to negative. So there is something going on there, and again, you just have to be a little aware of it. And it's not to say that the bullish flag pattern can't play out to a double top, but I would say if we did get to a double top, I'd probably be looking to short it at that point, as it does continue to look weak. All right, let's see what else we have here. Exxon Mobil and Chevron are both down today. Exxon Mobil down about 50 cents. Look at this double top on Exxon. Not surprising to see a little bit of a pullback there. Chevron CVX, we are seeing that down just slightly. Same thing, same general double top right up here as well. You can see a little pivot, and we're right back to that area. So there's a little bit of daily resistance on Chevron and Exxon, two key components in the Dow Jones Industrial Average. And those are actually two laggards along with Apple that are probably keeping this market from really having a big up day. I would say if those stocks were up, this market would be up sizably on the day, probably back to the highs of the day, if not even a little bit higher. All right, let's take a look at a couple other things here. Obviously, we want to take a look at the dollar again. Dollar continues to be slightly lower here, down 6 cents on the UUP. That's the daily chart of the UUP. And again, what we're going to do next is go to my real tick chart of the SLV. Silver, SLV, down $1.78 today. Big drop. This actually had a little bit of a flash crash when it reopened in Asia last night. Now, what we saw was all of a sudden in the first 10 minutes of trading, silver dropped 12%. 12%. Now, it's recovered a huge amount off of that. In fact, it's really not that big of a loss, but it's still down sizably. But that just shows you when stocks like this or commodities, this is a commodity ETF, when they jump 80% in a matter of 3 months, there's a good chance of a flash crash happening there. And you could see that very, very quickly overnight in the overnight session there in Asia before it recovered. GLD is having another okay day. This stock or this ETF for gold was sizably higher, making new highs, new 52-week all-time highs, but it has reversed. And it makes me wonder here, has the high on gold on the GLD be seen? We're going to watch for a little bit of a topping tail. This may be a topping tail today on the GLD. It needs to be monitored very, very closely. All right, guys, I think that's enough. Just a reminder, you can take the free trial of the Research Center. It's a 1-week free trial, no obligation. You put in your credit card, that's about it. You can cancel at any time, and it's just in there so it can automatically bill you if you decide to keep it. Otherwise, you just cancel it. Very simple. All right, even a caveman can do it, as the commercial says. Chat room is a 1-week free trial as well. Webinar coming up this coming Saturday. You can buy the DVD. Call the office to buy the DVD. That's our key strategies revealed DVD, where we talk about the major patterns we used to trade off of that are very, very high percentage. And again, as I just said before, that webinar this Saturday, folks, is a mind-blowing webinar. We reveal our proprietary techniques for calling cycles, count systems, major moves. And again, I encourage you to join up here at In the Money Stocks and start making the money that your friends that are members are making. Take care.